Good afternoon, everyone. This is a series on an overview on what you get with Praedox Trader's Assistant, how it works, what components are there, and how you can use it. So this is Praedox Trader's Assistant version 2.0. We're testing that right now, but let me give you an idea on what's included with Praedox Trader's Assistants and how you can use it. So there are several components to it. You have the ability to track 7 different setups: a reversal, a continuation, a breakout of the EMA, an aggressive breakout, and a volume aggressive breakout, as well as our trend cycle wave. Okay, so these are the 7 different types of orders. You have the ability to turn on a chop filter, move your position to break even when you are in automated mode, and flatten positions when you are in automated mode. If you are in manual trade mode, you will get all the signals. You can keep the chop filter turned on. You can manage which signals you get by clicking these buttons on and off. And you can use your own trade panel, but it will not give you the ability to flatten or move to break even because now you're controlled by your trade panel. If you have Predator, you can use Predator. If you have trade devils like I do, you can use trade devils, affordable indicators. You can just use those. And those are meant to be used when you are in manual mode like I am now. If you want to go into automated mode, you can turn trading on, and now you're in automated mode. So the benefit of that is you don't have to disable the strategy, change the mode, re-enable the strategy, and then by then you missed the trade you were trying to get into. So this will just allow you to toggle that on and off and use your trade panel at your will. You get a heat map. And what this heat map is, it tracks what I call the prices wave. So the ebbs and flows. So these ebbs up and these ebbs down and these ebbs up. You get into 3 different cycles: a buying wave, where you can see where it's green. You start to transition from red to yellow to this lighter color to light green to red when you're in your full-blown buying wave. And a selling wave, when you start getting into your selling wave. So when you go from green to yellow to light red to dark red, you're in your selling wave. When you're in these lighter colors here, that's your transition wave. So as we start to have the wave come down, we get into a transition wave. We then get confirmation that you are now in a selling wave. And when you're in your selling wave, your heat map will turn red, and you will get a signal to sell if it's valid below the EMA. So that's your trend cycle wave, and that's how the heat map works. You could use it as well to give you some confluence. So for example, if you get a buy signal and you have a red heat map, you might want to stay out. You don't have to. We do have some traders that do. I don't necessarily use the heat map when I get other signals other than the trend cycle, but you can. You can certainly do that. And we have traders with much success. So for example, here was the trend cycle wave where you were making your transition from selling into the buying. We got a trend cycle wave and you're buying here, or you could wait for a pullback and buy it here. Okay. Some traders wait and don't take the signal until they see a pullback. So in this case, you have your trend cycle wave. You wait for your pullback. You enter the order here and you take it up there. Okay. So that's a trend cycle wave with the heat map confluence. Now let's look at some of the other orders that it tracks for you. We have a reversal. And a reversal occurs when you are in an upswing or a downswing for a pretty good period of time, and your price starts to change and starts to identify a change in reversal, a change in flow. So for example, you can see here's a great example of a short reversal. And what will happen is you're down here, okay? you're buying. You get your buy reversal here. Not valid because it's below the EMA. However, you're still coming up, coming up, coming up, and then it kind of tops out here. Then this bar forms here. Now, I have large bar protection turned on. Large bar protection will basically keep you out of trades when bars are over a certain number of ticks. The default is 120 ticks. And why do you have that? Is to protect you from whipsawing. So typically when you have a large bar, they're going back and forth like this. So if you were to get into a trade, it's going to retrace. Large bars do that. That means there's a lot of buying and selling going on. So when they retrace like that, there's a good chance that you are going to get taken out. So if you were to get here, this bar was 162 ticks. Why would you even get into that? So we have large bar protection turned on, and you would not have gotten your reversal signal here. Even though this is a valid reversal signal, you would have been protected. So you notice you don't see the reversal signal being printed here. But this is a reversal signal. And when you get that, let's see if we have a valid reversal anywhere. It's been a down day today. So it's been, here we go. Nope, not there. We do not have any valid reversals today because it's been such a down day since market open. I mean, we were down right from the open. Okay, well, so reversal is either this blue bar, which basically says your reversal long. It's not valid, so you wouldn't see the signal because you're below the EMA. Okay, if you were valid, however, and you were above it and you were in a pretty good upswing, you're going to take that. That's a reversal, right? So you're basically saying that, hey, you were down, 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 coming down, as you can see. And now we have this reversal bar, and then you can see it turn back up. Now, again, is it a winning trade? Sure, it's a winning trade. But we have rules that we want to make sure we're following. Could you have gotten 400 ticks out of it? You probably would not have got all 400 ticks, but you could have. That's a really aggressive trade. If you're trading it manually, you can do that. But if you're in automated mode, it's not going to take it. But that's a reversal. It's basically saying, hey, we see a short-term change in direction. Here's where it would be. Now, it's not always right. But this gives you an indication on, is it a good area? So you're going to look at things like support and resistance. This was a pretty good area. It was at this pivot point right here. Okay. At the time, you were probably at the low of the day or the prior day low or something like that. Again, it's tough to see because we're back at 10 o'clock in the morning. But you can see we had a nice reversal up. Again, not valid, but you can see the reversal. So that's a reversal. It's looking for change in direction on the short-term level. Again, we're on the 1 minute, so you're not going to expect a swing. You're going to expect a short-term reversal. All right, next one is an aggressive breakout. Now, aggressive breakouts, you want to make sure you have your chop filter on. An aggressive breakout is basically a quick scalp when price closes above or below the EMA. That's all it is. So in this case, we had an aggressive breakout to the downside around 1020, and you see what happened after that. These tend to be very strong moves when they happen. You can see we had an aggressive breakout to the upside, and we had a quick push up. So anytime price is pushing through this EMA, you could bet that you're going to get a pretty good push in the direction it's breaking to. Doesn't mean it's going to happen, but it's a good indication, especially if you're at a support or resistance area. We were pretty close to this resistance area here. You can see we had price action that was bearish. We had an aggressive breakout to the downside. We're taking it. Who cares about what the heat map said? You had 2-3 points of confluence that said we're taking that. It was a small bar, and we took it. An aggressive breakout to the upside. Okay, here's a good example. We had it here. We really didn't have any other confluence. Yeah, the heat map was green, so there's one piece of it. You would have not gotten into it until this bar here, because again, you have an offset of 3 ticks above or below. You would have gotten into here, and you would have gotten a few ticks here. Okay? So the thing here is you don't get greedy with these. You go for your 20 to 40 ticks and you get out. If you're aggressive, there are some traders in our community that like to trail it. You can certainly trail it one line at a time. So good example would be I place my trade here. I get in the trade. Now I'm trailing here. Oops, here. And then I'm trailing here. All right, then I'm trailing here, and I got taken out here. So that's one way to trail. So you were here, you got taken out here, you got yourself 56 ticks. Now, if you wanted to be more aggressive, you could use the parabolic SAR. You can use a different EMA. You can use the ATR. All of these features are in Praedox Trader's Assistant. You can automatically use those if you turn them on. You can use the ATR, you can use parabolic SAR, you can use EMA, you could use the previous bars low, you can move the previous bars high, you could use the previous 3 bars, X bars, high or low. Whichever one you decide you want to use, you can certainly use those for trailing, or you could trail it manually. Your call. Okay, so that is the aggressive breakout. Okay, and the aggressive breakout and the EMA breakout. Okay, let's continue. Continuation. Continuation basically tells you that I did not have a valid reversal. It didn't pass our rules. Okay. You don't get a lot of these. You do not get a lot of these continuations. So let's see if we can find one. I don't think we're going to find one today because we did have a pretty good down day. Yeah, I'm not going to have one today. But what a continuation will allow you to do is you had this reversal here that was not valid. Why it wasn't valid? Because you did not have a close above the EMA. So the automated system will not get you into a trade. However, if you did have a bar that closes above the EMA here that had some volume associated with it, and the way we track volume is we look at the 20 EMA for volume, and we see is the current EMA greater than the 20 EMA on the volume side, and if so, that means there's significant volume being occurring on that bar. It's not rocket science. There's no AI to it. It's purely checking the volume's EMA. That's it. Pretty standard in the industry. Okay. So what does that look like? Well, if you have volume on a bar, you're going to see, in this case, you had selling volume. So you see how these are outlined here? You're going to have selling volume. Okay. That's another way to give you an indication on the direction you are about to see price go. Now, again, it doesn't happen all the time. It's the NQ. NQ has a mind of its own. So you may have significant selling volume to find out the next bar is a ton of buying and you're out of your trade. Okay. So when you see that and you close above it on the reversal, that's invalid. So if we had this bar with some significant volume that closed above here, that's a continuation. That's basically saying, well, you didn't have a valid reversal because you didn't have any, close above the EMA. You didn't have any follow through until this bar that had the volume, and the volume was a buy volume to the upside, and you close above the EMA. Therefore, you have some confirmation now. So that is a continuation trade, and then you'll see it flash here, continuation, and the automated strategy would take it, or you could take it as a manual trade. Okay, so that's a continuation trade. And then there is what we'll call an EMA breakout, which has some rules associated with it. It basically says when your price closes above or below the EMA and it has selling volume in this case, you're going to get in the trade. That's a sell. So what does that mean? Well, so what happens is there was some selling pressure here. This bar closed below the EMA. It was red. You're placing your order right here, and you get into it right here. and then you use our ATMs to take it down, right? So again, if you were trailing, okay, you got in there, you started trailing here, then you moved it here, then you trailed here, then you trailed here, and you got taken out here. So what would that have gotten you? That would have gotten you 276 ticks in a matter of what? 3 minutes? 5 minutes tops? Okay, 4 bars. 276 ticks. Okay, then you're done. You stop at that point. That's right at the open. So if you got into it there, you could have taken that and trailed it right down. Okay. That is an EMA breakout. So that's different from the aggressive breakout. The aggressive breakout doesn't look for volume. The EMA breakout does. Okay. And then we have our regular breakout. Our regular breakout, again, I don't think we're going to see a lot of these today either because we had a pretty good drop right from the start. Let's take a look. Okay, so here is a good example of a breakout. Now, breakout occurs when you have a reversal and or volume on a bar, and you're within an area of support or resistance. So you can see here, at the time, we had this area right, it was probably right around here where we had this low. Now, what it'll look for is, did you have a reversal or did you have volume or did you have both? And if it had one or the other and you're within a certain number of ticks, which you can configure, it would place your order right below that zone and look for it to bust through that area of support or resistance. So it's just a standard breakout. Again, it's no different than any other type of breakout. You're basically looking at the probability of it crashing through the most recent low of the 90 days, 90 bars rather, okay, or a significant level. So if I'm in an area of support and I'm getting close and I have a reversal and I have volume, it's going to place the order for you right below that zone. And if it goes through, again, they typically tend to have a lot of momentum behind it when they break through those zones, and you could take that trade down. Now, in this case, it did not get into the trade because you would have entered it here, your limit order here, and you would never have hit it. So after 3 bars, this order gets canceled. So that's the breakout. So that is a quick overview on all the types of trades that you can look for and utilize within Praedox Trader's Assistant. Now, what are some other features? Well, like I said, you have the ability to trade this manually or automated. It will keep track of your P&L for you. You have the ability to set up a maximum profit for the session or maximum loss for the session. This is session based. So if you have it set to 1500, it's for the session. Once the session resets, it starts all over again. This will also keep the P&L you have for your account. So in this case, 3,150. If I disable the strategy and come back in, it will still be there, and your max profit and max loss will still be there as well. Okay, so that's nice to have. Now, some of the other things that will be in version 2.0 that you won't get yet until we finish testing, the following. You have this indicator here that lets you know if it's a ranging day, a trending day, or an inside day. Now, why is that important? Well, you normally want to trade on a trending day. Now, this is dynamic. As market prices fluctuate throughout the day, this will change. So earlier on, it was trending. Okay. Right now, we're trending now because we're back up. Okay. We're actually trending down. Okay. So this will change based on the price action that's occurring throughout the day. Okay. You saw earlier it was ranging. Now this is not going to be because I was over here. Okay. This is what's currently going on. So we literally went from ranging, which it was right around here, to breaking structure. Where do we break structure? Right here. What happens? We're starting to trend down. Okay. So you'll start to see this change. So why is that important? Because if it's ranging, you tend to go back and forth and you don't get a lot of follow through. If it's an inside day, just stay away. Okay. That means it's an inside bar on your daily chart. Just stay away. Okay. Now, when it busts out of the inside day, you're fine. You can start to trade. Trending days are great days to trade. Okay. Ranging days are good days to scalp or stay away. So when you see this trending, you turn it on. When you see it ranging, you turn it off and you get into manual mode and look for good setups. So that'll be part of version 2.0. The other component part of version 2.0 is what we're calling the market open predictor. Okay, let's go back and look at the market open today. So at 9:28, you will get an indication that will give you some guidance as to what the direction will look like at the open. And it does a forecast on what that will do. It looks at pre-market activity. And then at the 929 bar, 2028 bar, it will tell you, we believe that based on pre-market activity, we are going to give a forecast of the market going down at the open. And what did it do? It went down at the open. Okay. This is purely based on pre-market price action and overnight price action. That's it. It's a forecast. Forecasts are right and wrong. A lot of times forecasts are wrong more than they're right. Okay. This has been pretty good the last few days. It just gives you some guidance as to what it thinks the market is going to do at the time it opens. So, if you want to be an aggressive trader, you are going to place your order right here, and wait for the open to happen. Okay. And it got in really fast. This bar was bigger than you think because it dropped 68 ticks. Easily hit your 20 tick, 40 tick targets. Okay. 20 ticks is where we get to break even quickly. When it hits 30 ticks, we move to break even plus 20. You want to lock in your $200. Okay. And it easily hit that this morning and then some because the trail picked it up and we got 300 and something dollars. Okay. That's one way. Or the other way is we have some traders that will that we were testing with that will actually put micros in here and just put one micro in there and just let it run all day. Now, in this case, you have to live through all the pullbacks. All right. But you can see that one micro that ebbed and flowed. But man, that one micro would be making some good, picking up some good ticks today. Again, you can see it probably got taken out here, but you can see you're not going to want to sit through that. So that's another component that you'll get with version 2.0. The other component of it is the Praedox forecast matrix Pro Edition, which allows you to look at significant levels as well as multi-time frame. This is a heuristics model that we utilize that takes and crunches the last, in this case, 500 bars, if you have that many bars. So if you don't have that many bars, it'll go back as far as it can go. So if you have 350 bars, it'll take the 350 bars. And it will forecast a bias and a verdict on what it thinks it's going to happen in the future. It's purely a forecast again. It's more of a heuristics model. It's not AI, it's a heuristics mathematical model, okay, that we go back and we analyze. So in this case, it's saying that the 1 minute is neutral. And it is. You can see at this point, we're at the market's closed, we are neutral. Okay, we're not supporting either longs or shorts. You can see 54% to the downside, 46% to the upside. Okay, the 5 minute is looking at a 5 minute, 5 minutes looking at a long bias. And then the 10, 15, 30, 1 hour, 4 hour is looking at short. Now, these could be changed. So if I want to go into our model and look at my forecast, okay, I can say I only want to have the 1 minute, 5 minute, 15 minute, 30 minute, and the 60 minute. That's all I care about. I don't care about the 4 hour, the 1 hour, blah, blah, blah. Don't care about it. So now that's all I'm looking at. That's all I care about. I'm a short-term trader. I don't care what that says. We're going to go as far as the 1 hour, and that's be done. So you can see the 5 minutes still long bias, 15, 30, and 1 hour are short. 1 minute's neutral. Okay. Again, the 1 minute really doesn't care about the 1 hour. It's so fast. But if you were a swing trader, you might have this on a 15 and a 30 and 1 hour. Okay. But it gives you an indication. So if I'm getting strong, like earlier, we had strong 98% short, 2% long when we were trending down. All we were taking the shorts. It's all we were taking the shorts. Okay. You'd get a buy signal, just ignore it. Okay. So that's another component. And then finally, you will get price action. The price action indicator works and looks for the most common candlestick patterns, bullish and bearish. Now, it's got some more features to it. Okay. It looks for the upside, it looks for follow through. So, here's a good example. We had a pin bar form right here. We were at a pretty nice resistance area, and look what happened. Okay. So you can trade price action. You don't need to wait for the Praedox Trader's Assistance signal. If you learn price action and want to take advantage of the price action, you can. You could trade this pin bar manually and just place the order here and write it down. Okay. Some are stronger than others. I think what we're going to do is we're going to add a strength so that when you have a strong pattern, we'll let you know that is a strong pattern. So there's an order to these. Okay. Now, this is very powerful from a configuration standpoint. Let's go look at our settings for this. Strong. You get the ability to look at 2-bar patterns, 3-bar patterns, 2 and 3-bar patterns, or 1, 2, and 3-bar patterns. We have it defaulted to 3 bars. Some of these, you want a pin bar that the wick to body ratio is going to be 2. Okay. We could set it to 1.5, 2. It's basically what the wick to the body is. So if I want a bigger wick and a small body, I'm setting it to 2. You can change the colors of your bull and bear text colors. If anything's neutral, you can change it to white. Right? You can move the signals up and down. You can show a signal arrow if you want. Okay. So you can see pin bar. There's your sell arrow. You can turn that on. You can choose to fill the signal. So I filled that out with the color or outline it instead. So we just outline it for that direction. Okay. I can choose whether I want a full name of the pattern or a condensed name. If I change the condensed name, it will just say bearish price action, bullish price action. Okay. So that's pretty good. That's a nice little feature there. Okay. I can choose, let's keep this back at full. I can also choose to say, okay, where was that price action pattern at? Was it on a key level? So if I turn the price action show levels, it's going to tell me that in this case, I had a pin bar bullish at the EMA, the 100 EMA. This is going to tell me I had a pin bar bearish at the rolling high, which was right here. I had a tweezer top at the round numbers, 25,150. Okay, round numbers. Look what that did. Round numbers are respected. I had 3 white soldiers at the rolling high. And you can see, as I get to these key areas, we had a lot at the round numbers. A lot at the round numbers. So that's what that'll do. Is if you turn that on, you could see the actual level. I don't like to keep the signal arrows on. All right. Proximity, if I want to do a wick touch, a range cross, if I want to have the body touch or close proximity, wick touch is enough. You need to change that. And what's the proximity to the level? Okay, now here's where you just choose what levels you want it to look at. I want to use the open, high, low close. I want to use the classic pivot points. If I want to use an EMA, if I want to use the session VWAP, round numbers, the London high and low, the rolling high and low, I can use any of those as key levels and say, check for price action around these levels. It will not look for price action between the levels. It's only going to look for them at key levels because those are the areas you want, right? You only care about bullish or bearish price action when you're at a key level. So if I'm at a support area and I get a pin bar to the bull side, I'm taking it. Strong level, right? You could also choose which patterns to look for. Now, if I turn my trade guides on, a trade guide will tell you there's been confirmation. Okay. So look, we had follow through. That's all it does. It just says, yeah, we had follow through. We had an outside down, right? We had follow through on this bar. You can take that if you wanted to, just to help you understand the trade. And you could set your targets: half of ATR, half of ATR, half of ATR. Right? That's all we do. Then there's a tier 1 pattern, which are the more advanced patterns that you can pick and choose. And there's some tolerances in here, so you could just leave those alone. Okay. Now, minimum bars between labels. Let's say I want it to look for signals on every bar that's near a key level. Watch what that'll do. You'll have price action signals all over the place. Now, not everyone's going to be having follow through. You can see the ones that have the guidelines on it, but you can see we get a lot of them. Okay. So that is too much. So what we like to keep as default in our testing that's going on right now, we just keep that at 5. 5 or 6 is good. You don't want anything more than that. It's a good balance. Okay. So let's turn the guidelines off. So that will be with version 2.0. Okay. So we're still testing this, making sure that things are working the way they should. And you can use this in what I call intra-bar mode or on-bar close. So if you have an intra-bar, okay, you'll have it on each tick or price change. So on each tick, what'll happen is if you are getting price action occurring at a level, you might get bearish and bullish flashing on and off, red, green, red, green, red, green, red, green, right? Okay. And not until the bar closes will it confirm whether or not it was bullish or bearish or nothing. So if this was going back and forth between tweezer and engulfing and tweezer and engulfing, and then when this bar closed, it was neither, this would not be here. It would not print it. However, in this case, it ended up closing as a tweezer top, and that's it. Done. If you don't want to see the flashing, you just change it to on bar close. That's the price action. So you get that as part of version 2.0. The other thing I want to share with you is as part of Praedox Trader's Assistant, you can also turn on the London high and low for your support and resistance. That's part of it. So we do look at London high and low overnight session for support and resistance as well, because it is a key level. So we keep that as a key level, and we will not let you have a signal that is buying into resistance or selling into support. So you can turn that on. You put the time, your time in where in your time zone it occurs, and that's it. Okay, it will stay there all day and use it as support resistance. It's just another level for you to be aware of because it's like a magnet, especially at the open. Okay, so when and how do you use this? Well, let's take a look. Here's some great places to look at. Yeah, I know it's after the fact, but this is real time too. So I get a bullish engulfing signal here. All right, I don't get follow through, but I get this a couple bars later. Then I get 3 white soldiers. At the same time, I'm getting an EMA aggressive breakout. At the same time, the next bar is a trend cycle wave. Well, that tells you there's a lot of bullish activity going on. Okay. You're going to take that trade. Okay. And like I said, if you want to wait for a pullback, you could take the trade at the next bar here. Okay. It doesn't always work out that way, but bullish engulfing, 3 white soldiers, EMA aggressive breakout. If you don't want to take it, you waited for the trend cycle wave. Okay. Here's another good example. We had a wick rejection off the, wick rejection off of the round numbers. Okay. At the same time, you had the trend cycle wave. At the same time, you had a reversal. You're going to go for your 20 ticks. Why not? All right. If we just looked at it from the open, all right, what's nice about it is we can see right away how this works. So these don't go away. This is exactly how it printed. All right. We had it out. We had our forecast say it was down. Great. You were done probably after that trade. Right. Now you wait. You have an outside down. Can you scalp it? Sure you can. Probably too fast. You're probably not going to get in fast enough if you're doing manual trade. We get this EMA breakout with the volume. Okay. Do you take that? Well, why wouldn't you? You had it outside. You had a bearish pattern here forming. You had a pin bar here, bullish, with no follow through. At least here you had some follow through. You had the outside down, it went down. Okay, it closed up, but it still didn't close above this. Then you get the EMA breakout with volume. That's a trade you could take. 3 black crows, volume, 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 3 black crows. Chances are you take it. That's what happens if you want to trade price action. 3 black crows is a strong signal. As a price action trader, you're taking that. You get a bearish engulfing. It's red. You're taking that. Now, again, yeah, it's easy to look at after the fact, but these are printing that way. This is just how you use it. Now I'm trading price action, right? I get a wick rejection, right, at this support area, at the pivot point. I'm getting a bullish engulfing here right at the pivot point. As a price action trader, is that pivot point strong? Yes. Okay. You want to wait for it to retest? You can wait for the retest here. Get in there. Take that bearish engulfing, get your 20 ticks plus. Okay. Come down here. I get a pin bar bearish I'm a little hesitant to take any longs at this point. Right after that, I get a reversal, but it's not valid because I'm below the 100 EMA. So but I do see I'm having a reversal. Get an EMA aggressive breakout. Am I putting the order here? Yes. Am I getting into it? No, because what happens right after that, you get an aggressive breakout short. The system is putting it 3 ticks below. You're still not getting in there because it never hits 3 ticks below that. It's going to get canceled. I get a bullish engulfing. Do I take it? No, you're not taking it. Why? Because you're right at this resistance area. Okay, yeah. Would it win? Yeah, great, but you're not taking it. Okay, these are the decisions you're looking at. This, as a trader, you need to look left, you need to look up, you need to look down, you need to look over. Okay, these are not good trades. You're getting a bearish engulfing right at here, right at this high, this prior day's high. All right, that's a strong area of resistance. I get a bearish engulfing. I get a pin bar bearish. I get an EMA aggressive breakout. You're going to take this all day long. You had the bearish engulfing, you had follow through, you had a pin bar, you had follow through. You get the Praedox assistance signal to sell. You're taking it. Follow through, signal short. You're taking it. You're done for the day at 10:20. You were done for the day at 9:32. Okay? But if you're one of these people that just loves to trade, which I do not recommend, nor do I ever say walk away from your computer and let Praedox Trader's Assistant running. If you do, I'll give you your money back. This is just not going to happen. That's not how we trade here. Our family of Praedox Trader's Assistants do not use this as a set and forget strategy. It is not that. It is your assistant. It will look for setups for you. You make the decision as to a trader to take it. I will never, ever support this as a set and forget. And like I said, none of our traders treat it that way. They treat it as their assistant. It gives them a good setup, and that's why they're so successful at this point. We follow strict rules. One and done, power of quitting. I don't care if it's $52.50. If that's what you made that day, you're done. Okay? If you hit your maximum loss for the day, you're done. You sit on your hands and you walk away. We do not condone trading for the sake of trading. We don't condone revenge trading. You lose, you lose. Do we have losses? Absolutely. Absolutely. It could put you in a false. We had one trader tell us the other day, this is putting me in a false sense of security. I have not been this successful in a long time. And I'm worried when I'm going to have a losing day after like a 25-day win streak. That's not going to happen. You're going to lose. You're going to lose. Okay? Expect it. But when you do, lose gracefully, walk away. Do not revenge trade. You live to trade another day. We will not condone that in our trade room. Absolutely will not. If you're going to revenge trade or use this as a set and forget strategy, please don't buy it. Please don't join us. That's not what we do. And I'm not trying to scare you away. This is a trader's assistant and it's meant to be used that way. And every one of our traders will tell you the same thing. Okay, I'm off my soapbox. All right, so we continue. 3 black crows. Okay, this happened to be a great trending day. Okay, that's a great day to play. You're playing your pullbacks. You're playing your price action trades. Okay, you notice we did not have any trader's assistant setups going on here. We had a TCW here. All right, TCW here. You're near an area of support. Are you selling into support? No, you're not. Now, you had a bearish engulfing here, and you can see this dotted line was that support area here. Bearish engulfing, okay, I had some bearish activity. I get the TCW. Do I get in it? No. If you did, you weren't going to get in. It would cancel the 50 bars anyway because it never hit. Okay. Now we get an upside down pattern here, followed by a trend cycle wave here. Okay. Now, do I have 40 ticks to that area? It wouldn't give it to me if it didn't, right? So you have 62 ticks. You're taking that trade. Plenty of room. Plenty of room. Now I want to see if I had 40 ticks here. It might have, because again, these are small bars, but it doesn't mean they don't have ticks in the way. Yeah, 19 ticks now. All right, so that's your taking. You get your 40 ticks. Okay. Bearish engulfing, 3 white soldiers. Again, no follow through on that. Your next bar was down. Okay. So this is how you use it. You look at the price action at the level, you look at where you are, look at the left and see how it reacted to that level earlier. And then you decide whether or not you want to take that trade. Here's a reversal here. Okay. That we showed earlier. You got your 20 ticks plus. You had your breakout here, never got in because it turned away on you. Okay. So that's how you're going to use the price action along with the signals. Okay. Again, price action are going to be only at key levels. Okay. Another good example here. You can see we're not a lot of crazy losing trades here. All right. This one here, you got, if it got in, 15 ticks. Okay. So that might have been a loss there. This one here. And again, actually, it had the chop filter on. So you were not going to, yeah, you would have gotten that trade because it gave you a signal here. You would have gotten that trade. You got your 20 ticks. In that case, this one here, you easily got your 20 ticks. Then you had an outside down, trend cycle wave, close well below, trend cycle wave, close below the EMA, outside down bearish price action, you're taking it. EMA breakout to the upside aggressive, you're not getting in it because it's going to go down. You never get in it because you need to be 3 to 5 ticks above that, and it's not hitting that, and it's heading down, so it would cancel right after the third bar. Okay, if you want to trade price action, the Harami cross is usually a pretty good pattern to be trading on. Okay, if you don't, you want to wait. You wait. You get some volume here. There's a big bar followed by a breakout. So you can see that's how you use price action along with traders assistant signals. Okay, and setups. So that's it. You could, like I said, join the community. And we are having a Black Friday sale at this moment on Lifetime. You get $200 off of that. So anyway, hopefully this overview video has helped you out. We're excited about version 2. We're just testing it. Hopefully you get a good idea on what Praedox Traders Assistant can do for you as a trader. And with that, I want you to have a great rest of your day. And we look forward to continue trading with you. Have a great day.